Hey everybody, so just wanted to make a recap video. Apologies if you were expecting a video over the weekend. Sometimes I don't make videos if I don't really feel like I've seen anything. So, most of last week was pretty much a nothing burger where we were just essentially just chopping back and forth. But today, we definitely saw something happen in the markets, and I'll walk you guys through that. So, just for starters, as always, we're going to cover the Fed funds futures. So if we're looking at the difference between the March and the December contracts, it's basically giving us a negative 0.03 reading, which is pretty much close to zero. So that's essentially saying, hey, you know what? Whatever rates we have in March or whatever rates we have now is basically going to be the same rates in December. So that's essentially what that is saying. Now, moving on, let's go ahead. Let's look at the Qs. So two things I want to point out right away. So the first thing is, we have this anchored VWAP right here. This is lining up right at 316.20. Where did we close today? At 316.28. So, we're basically right on this anchored VWAP right there. And the second thing that I want to point out, if I zoom in right here, we have this quarterly marker right here. So this dotted line, that's representing a new quarter. But take a look at how price action has pretty much acted. So going into the end of March, we haven't really made much higher highs. So, I mean, we made this high ever so slightly higher, and then we made this high as well, but it's essentially not a whole lot different than where we closed the end of March. So ultimately, it seems really, really bullish because every single gap down that we're having, we're basically filling that gap. So it seems really, really bullish, but, in hindsight, we're really just chopping around here. So when you do see chop like this, it means one or two things. It means accumulation or distribution. So you have to decide, okay, well, is this accumulation or is this distribution? So let's just zoom out a little bit. Let's go over to the 10-year 1 day, which I'm actually on right now. So I just got to zoom out here. So if we see right here, we had some chop right here as well. That was distribution. You guys can also see chop right here as well. That was distribution. And notice that it's happening along this wedge structure, the top of this wedge structure. So this could be accumulation or it could be distribution. But I'm more or less leaning towards it being distribution. And my reasoning for that is because we're at the top of this wedge structure. We have gaps down below as well. And, we're starting to lose a little bit of momentum here. So that's pretty much my thoughts right there. But it could also turn into a bullish way because as you guys can see, we're still holding this anchor VWAP. What if we were just consolidating around this anchor VWAP only to bounce higher? That could happen too. So you don't want to rule that situation out. But like I said, I am more leaning towards this being distribution. So let's go ahead and let's look at a shorter time frame. So I'm going to look at the 30-day, 30-minute chart now. So here you can see two gaps right here. So this first gap, it's going to get filled at 313.11. Then we have this other one. It's going to get filled at 307.26. Now also note that we did have this minor support trend right here. So it was support right there, and support right there. But then ever since we broke out of this, it's just been chop. So it's been a whole lot of chop. So now, we're kind of basing out around this top right there. And then, we're flattening out and then we're falling right here. So, are we going to fill this gap and then fill this gap and then eventually hit this trend line? That's quite possible. And then what's going to happen when we do hit this trend line? Are we just going to bounce and then make a higher high? Because that could happen as well. So there's a lot of different scenarios that could play out. So let's just go back to a shorter time. Let's look at the 10-day 5-minute chart. So if we're just looking at this, you guys can clearly see that, hey, you know what? It's not really holding above that line, fake breakout, fake breakout, fake breakout. And then right here, we hit that line perfectly only to reject very, very hardly. So you guys can see how hard we rejected right there. That was a hard reject. And then notice that, hey, you know what? We actually gapped down this morning. So we gapped down, and then this actually tricked a lot of bulls. So a lot of people, they saw this gap getting filled, and then they were thinking, oh, okay, well, maybe we're going to continue on higher. But then, nope, we rejected right there, and it was a hard reject. So I'm sure a lot of people got trapped right here, and that's a pretty cruddy situation to be in. So you always want to be mindful of these structures right here. So this is essentially how you know that you drew your line perfectly when it rejects exactly at that point right there. So now let's go ahead. Let's go back to the 10-year 1-day. And let's just do a few things. I want to look at MACD and RSI. So I'm going to go ahead and type in MACD. Now let's go ahead. Let's look at RSI. And let's apply that. Now, if we're looking at RSI, it's come down quite a bit. Right now, it's giving us a 56 reading. Now, if we're looking at MACD, I'm going to have to zoom in a little bit here. So as you guys can see, it did cross underneath the signal line, but it's not a strong crossover. This is pretty much almost flat there, as you guys can see. So, right now, we do have that bearish crossover on the MACD, but it's not a strong bearish crossover, so it could still uninvert itself. And that's kind of what you got to be cautious of. But like I said, right now, we're pretty much sitting on that VWAP, and we have 2 gaps down below. So if we do break that VWAP, then yeah, I do expect that these gaps might get filled, especially if it's a close below this VWAP. So I do have to specify a close, because right here that we did go underneath, but as you can see, the day ended higher. And then right here, we can perfectly see that it bounced right off these levels right there. So that's a very important level that you guys need to watch. Now, let's go ahead. Let's move on to the next chart. So now we're going to look at SPY. So let's go ahead and just zoom in right here. And let's go on a shorter time frame. So the 30-day, 30-minute chart. So if you guys are looking at this, we have this wedge structure going on. Now look what just happened. So we have the support down here. Now as you guys can see, we had this gap. Let me zoom in a little bit. So right when we broke underneath this trend line, we broke underneath with a gap. And then as you guys can see, we basically gapped, and then we almost went up to fill this. Now we didn't quite actually fill this, so I'm going to have to show you on an even shorter time frame. So as you guys can see, this was not an actual fill, because look, this is where the day basically closed out. So the day closed out right there, and then the gap happened right around here. So if we want to actually fill this gap, it's going to have to be right around like that 414 level. So we didn't really get there. We came pretty darn close. So now there's this interesting structure. So now, I'm going to go back to that 30-day, 30-minute chart. Right now, this might be the new structure that we're in. And then we just bounce around here, and then maybe we go down to fill these gaps. So that's very possible. But the key thing to note here is that we did break out of this rising wedge right here, and we didn't fill the gap on the same day. So every day prior, when we had a gap down, that shit got filled. But today, it didn't get filled. So that's what I was talking about before. The market sometimes trains people that every single gap down is going to get filled. So, hey, why don't you just buy the dip? Because once you get the full gap filled, then you could just sell. And then, you make out like a bandit. So maybe there are a lot of people who are thinking they do that. So I'm going to go on the 1-day, 1 minute. There's probably a lot of people who are thinking they're going to do that. But then it didn't quite make it all the way up there. And then, they got stuck right here. And then, boom, you got a flush. So this is why it's always good to sell your... it's always good to just take the profits before the actual gap fills. Because sometimes people pull the trigger prematurely, and then you get something like this happen. So to me, that's just the rule of thumb. That's just being prudent. So now let's go over and let's look at a 10-year 1-day chart again. And let's just look at this anchored VWAP right here. So if we're paying attention to where this anchored VWAP is, that's right around 407.60. So, if we do come down to that level, watch out, see if we bounce. And like I said, we do have some gaps down below as well. Now, another thing that I am paying attention to is the MACD. So if you're looking at the MACD right there, it does almost look like it wants to curl over. So this does look like it might have a bearish crossover soon. And, that could definitely happen if we do continue to just see a little bit more sell-off days. So we don't have to sell off a whole lot more to see this happen. But you do want to be wary of that because once that signal line does cross, things could get ugly, especially if it doesn't uninvert itself right away. So as of now, we have several gaps to the downside. And, right now we just broke out of this rising wedge. So there is a lot of uncertainty right here because we don't really know how the next structure is going to play out. So, like I said, we want to watch out for this 407.60 level. And then we want to watch out for these gaps down below. So, let me just go ahead and do you guys a solid. And let's just call out these gap levels. So we got this first one right here. That one, if we want to fill it, it's going to be right around 403.76. Next one, it gets filled right at 401.32. And then the one after that, the very bottom one, that's going to get filled at 395.70. So that's what you guys got to watch out for. Now, one last thing, let's just talk about moving averages here. So, if we're looking at moving averages, we got this 402.44 for the 50, and then we got this 394.72 for the 200. Now, let's just zoom in right there. So it's very possible that we could fill this gap right here, this one at 401.32, and then maybe we get right back up to the 50-day. So if we do fill that gap right there, you don't want to get too greedy, if you're a bear. You don't want to get too greedy and then think that we're going to go down to this gap because like I said, there's a 50-day moving average right there. We could just knife right below this 50-day, fill that gap, and then come right back up. So you want to be very cautious of that. Now, what about this gap down here? So let's say we do fill that gap right there. And then let's say you get a little bit greedy and you're thinking, oh, okay, well, we're going to make a new low. But hey, you know what? There's this 200-day moving average right there, and there's this anchored VWAP right there. So, hey, you know what? Maybe we do fill this gap too, but then we just come right down to the 200 and we bounce. Now, if I am zooming out a little bit, I do want to talk about the structure right here. So we have this low right here, a higher low right there, a higher high right here, and then we have this higher low right there. So what's going to make this look very bearish? If we break below this low right here, then that breaks the structure that we have where we have higher lows. So right now this looks awfully like a double top. So I mentioned in my last video that too many people were expecting that this might be a head and shoulders pattern. And when too many people are expecting that, guess what happens? You get a double top instead. So that distinction right there could be enough to basically screw a lot of shorts out of their shorts. So, they're going to get squeezed and then, hey, you get squeezed to this double top scenario. Now, this might be a double top, maybe not. We have to see this play out a little bit more. So like I said, we want to look at that anchor VWAP right there, right around 407.50-ish. And then after that, we have that 50-day moving average, and then we have all of those gaps. So that's basically my analysis on SPY. Now let's talk about Tesla. So Tesla, the earnings weren't too great, but the earnings aren't too great in the near term. So essentially what happened here is, hey, you know what? The cash flow kind of sucked. And hey, you know what? The margins kind of sucked. And, the earnings per share kind of dropped. And the next quarter's projections for earnings per share, that also kind of dropped. So overall, the story is basically, hey, you know what? Our revenue increased, but our profits decreased because our margins are getting squeezed. We're not receiving as much as we used to because we keep making price cuts on our cars. So, they're doing this to basically keep up with demand. And essentially, it might be working for them, but it's working for them at the expense of their profit. So obviously, we got so many downgrades today. I swear to God, I think there's like 4 or 5 or some stupid amount of downgrades in one day. So yeah, that's going to weigh on Tesla right here. And we have this massive gap. So I want to point out what's going on here. So now we're below the 200-day moving average. We're below the 50-day moving average. We're below these key anchored VWAPs. And these anchored VWAPs are right around that 176 to 177 area. So we basically knifed right down below that. We're below this trend line right here. So yeah, it's not a good situation. So now you might think, okay, well, where can we fall down to? Well, we have this gap right here. And if we want to fill this gap, it's right around 146. Now, a lot of people, they're basically saying, hey, you know what? We're never going to see this gap get filled on Tesla. But now, a lot of people are thinking, uh-oh, that might actually happen. Because it's really only like $18 away. Now, at this point, here's a good thing that I want to show you. You might want to do a fib. So let's go ahead. Let's see. Let's do a drawing right here. Let's look for that fib. So I don't do fibs that often, but when I do see a scenario where you could use it, I do tend to try and use it. So we're going to use this fib retracement tool. We're going to basically catch that bottom right there. And we're going to draw it to that top right there. And guess what you got right there? Basically, where this gap fills is that 61.8% retracement level. So in my opinion, if we do get down there, you're definitely going to see some sort of reaction. Maybe it's not just this massive bounce on Tesla. Maybe it's, a small bounce. But, it will be big enough of a bounce where, if you are shorting Tesla, you might get scared out of it. Or if you are a bull, you might want to take a position right here with a tight stop loss. So that's basically what I'm looking at on Tesla. Now, moving on, we're going to look at the dollar. So in my prior video, I talked about that macro level trend line on the dollar. And hey, guess what? We bounced right off it. But we're not having this super strong reaction off of it. I mean, we went up a little bit, but maybe we could go up a little bit more. So one thing that I do want to know is if we're looking at MACD, over here, MACD did have a bullish crossover. Now, it's not a super strong crossover, but it is a crossover. So this could uninvert itself pretty quickly, but as of now, this is a bullish crossover. Now, let's go ahead and look on a shorter time frame. So let's look at the 30-day, 30-minute, or actually let's go on the 90-day, 1 hour. So if I'm looking at the 90-day, 1 hour, I want to point out all of these gaps that we're seeing. So we got this gap right here. That's right around 102.56. Got another gap right there. That's right around 103.67. Got another gap right here, right around 104.38. And another gap all the way up here at 105.65. Now, oftentimes when you do see gaps on the dollar, they get filled right away. So this goes to show just how strong that sell-off was on the dollar. So many people were talking about, de-dollarization, this and that. And, basically every single headline about the dollar is saying that the dollar is going to get dethroned, blah, 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 blah. And then, next thing you know, we have several gaps and they're not really getting filled. So if we do see a situation where the dollar does rally, it does continue to rally, and especially if it breaks out of the wedge that it's in. So let me just show you that wedge. If it breaks out of this wedge that it's in, then yeah, you're gonna see these gaps likely getting filled. So definitely do watch out for that. Now, on the flip side, let's say we break out of this wedge. Well, that's going to be very bearish for the dollar. So you do want to watch out for that as well. But given just the importance of this macro level trend line, I get a feeling that, we would chop around for a while before we actually just have a decisive move down. So definitely do pay attention to the dollar and all of these gaps, especially if the dollar just starts rallying like crazy. Now, that could possibly happen right around FOMC meeting day. Maybe they say something that would imply that they do want to raise rates a little bit more. So definitely do watch the dollar right around the start of May because things could get a little bit hairy. All right, now let's look at the VIX. So I've been screaming about this macro level trend line on the VIX. And just a good way to take out some of the noise is to look at the VIX on the weekly chart. Now let me zoom in and show you where we are on Thursday. Let's take a look at that. So, we have the support right here. And look, basically at the end of the day, we somehow squeezed up to get back above this trend line. So the important thing is, hey, are we going to hold this at the end of the week? Because if all of a sudden VIX just flushes on Friday, that's not going to be a good sign for volatility. Now, I do want to show you basically what happened intraday. So intraday, we had this gap up. So when we opened the VIX with a gap up, just think of that as a trap or a gap down. So this is often a trap, and oftentimes what happens is that it gets filled right away. So when the VIX does get dangerous is when you see an intraday rally on the VIX. That's when things get dangerous because, hey, you know what? The gap was already filled. What are we going to fill? The next gap up here is all the way up here. So this gap hasn't gotten filled. This one is at 1915 if we want to fill it. So that could cause quite a ruckus in the market if we do just shoot up all the way to fill this gap. So the one thing that I do want to note is that, hey, you know what? We did have a gap earlier that did get filled. So let me go ahead and look for this. So if we're just looking around here, let's just poke around. Or maybe not. I could have swore I saw a gap around here. All right, so I guess maybe I was lying. All right, now let's just go ahead and look at the next ticker. Pretend that didn't happen. All right, so if we're looking at Apple, this is basically the structure that we're in. We're in this rising wedge right here, as you guys can see. And we have these resistances that are basically connecting these pivots from the top. So we have this one right here, and we have this one right there. So let me just zoom in on that. So as you guys can see, this one right here, it was acting as resistance, but we did get back above it. We hit the top of this wedge structure, and then we bounced off of this. So this is now acting as support, this trend line right here. So you guys can clearly see we bounced off of that. Now, we have this trend line right here. It's coming down, and maybe we actually hit it. So, or maybe not. Maybe I drew it slightly off, but just pay attention to that. So it's pretty darn close. So if we were to hit it, it would be like 168.50. So let me just zoom out again. Now let me go to a lower time frame. Let's look at the 30-day, 30-minute. So if we're just looking here, we have gaps. So let me just list out these gaps for you. So the first one is right at 165.29. The next one is at 160.13. And the next one is at 157.81. So do note that if we were to fill this gap right here, that would actually take us underneath this trend line right here. So maybe we do fill this gap only to get right back above the trend line. That's very possible. Maybe we do fill this gap right here only to get right back above this trend line right here, which was a pivot off the top. So, this is where we bounced right here. So we bounced right here. So if we were to just fill this one, we could just get right back above this trend line right here. And then maybe we just chop around a little bit. But as of right now, we did have this shorter term support trend line right here that we did break. So as you guys can see, where we had that gap. So I'm going to have to go on a lower time frame right here. So where we did have that gap right there, you can see it's right on this support trend line. So, hey, you know what? We gapped. We started the day with a gap down. And then we rallied. But then this was acting as resistance. So resistance right there, resistance right there. And then right here, when it hit that resistance, it basically triggered a massive, massive, massive sell-off. We almost came down to fill this gap right here, but no dice, no dice. And then we had this end of the day rally. So it was definitely an interesting day on Apple, and it caused a lot of shakiness in the markets. So now, I already talked about Tesla. Let's talk about XLF. So XLF is the financials. Now, one key thing I want to talk about. So you see this line right there? That's the 50-day moving average. This line right here, that's the 200-day moving average. Well, guess what? We pretty much have a death cross. So boom, death cross right there. So the financials are going to start looking a little bit shakier, especially because we also have gaps to the downside. So let me show you these gaps. So I'm going to have to go on a lower time frame. So we got this gap right there. That's at 32.56 if we want to fill it. Then this one right here, it's at 31.40. Then this one right here, it is at 31. So we got 3 gaps to the downside. And we got a death cross. So financials, they don't look too good. And let's go ahead. Let's look at IWM. So if we're looking at IWM, look right here again. 50, 200, death cross. Now, we're actually not exactly at the death cross, but we are pretty darn close. So you guys see that? We are pretty darn close. There's probably like 2 cents in between that. So yeah, it's basically getting a death cross. Now, let's kind of see if there's anything else going on here. So let me just zoom out a little bit. All right, so we're basically on this trend line. So I talked about this trend line in the past. So I'm going to have to show you on a weekly time frame. So this is the significance of this trend line right here. So right there, support, code crash, pivot, and then support, resistance right here. So that's essentially what's going on. So we have a death cross on the weekly, we have a death cross on the daily, and we're right below this macro level trend line. So it doesn't look too good for IWM. But does that mean we're just going to crash right away? Maybe. Or maybe we just get, one final pump and then we get a massive dump. So that could happen too. So definitely do be cautious. You probably don't want to be going long on IWM right around here, just given these warning shots right here. Now, last ticker that I want to look at today is Meta. So I do want to point out something interesting. So when I have this anchored VWAP from the pre-COVID crash and the bottom of the COVID crash, you see something interesting. So look where they're going right now. It's basically right at 220.56. And you can see that we were rejecting off this area. So this anchored VWAP, pretty much from the COVID crash levels, is now acting as resistance right here. So definitely something to pay attention to. Now, let's go ahead. Let's look at RSI as well. If we're looking at RSI came down significantly. So, this was in the 70s. It even went above the 70s. Now it pulled back to around 58. So that's quite a pullback in RSI. Now, let's go ahead. Let's get rid of that. I want to show you one more thing. So if we're just looking at this support trend line right here, let's go on a shorter time frame. Now, if we were to go and hit this trend line right there, that would be roughly around like 210-ish. So you want to see how Meta reacts when we hit this trend line. And what's going to happen if we cut through this trend line? Well, I think we could fill this gap right there. And that gap right there will get filled right around 201.18. And there is another gap below that as well. That one's going to get filled right around 181.55. And of course, there's that massive gap right there. So I don't really think that this one's going to get filled right away, but we'll see. Maybe if we have a massive earnings drop, then hey, you know what? Maybe this one can get filled. But do you notice that we do have this 200-day moving average? It is curling up. And hey, guess what? It's right around this gap zone. So what would a scenario look like if earnings suck? Maybe we just crash and we come all the way down, we fill this gap, and then the 200-day acts as support, and then we carry on as usual. Because as you guys can see, basically from when we had this massive rally, we haven't really had a digestion move. it's not really been digestion. It's just been continuing up and up and up and up. So now, we're finally reaching this support area, and you guys can see how steep this support trend line is. That's pretty crazy. So we've just been going up non-stop, and finally, we're coming down, and we're about to test this. So yeah, that would just be about $3 or so off of the spot price right here. So that basically concludes my technical analysis recap, and I hope you guys enjoyed this video.